Welcome to The Explainer. Today, we're going to dive into a pretty radical idea, a whole new way of looking at our financial system. What if it's not some machine we can just control? What if it's more like a living ecosystem that we can only hope to guide?
For the longest time, the prevailing view of finance was that it's basically a machine, right? A really complicated one, sure, but something we could engineer, something we could control and hopefully predict. But, well, crisis after crisis has shown us that model is just broken. It begs the question, what if it's not a machine at all? What if finance is actually more like a living, breathing ecosystem, something adaptive, interconnected, and that we can only steward, not control?
All right, so to really get why this shift in thinking is so important, we've got to dig into that old model first. Let's take a look at why exactly it keeps breaking down on us. The classic textbook idea is this concept called finance as a veil. And the idea is pretty simple, really. In a perfect world, finance is just there. It's a neutral layer that helps the real economy, people making things, buying things, do its thing. It doesn't actually shape anything on its own. It's just plumbing. It's a really elegant theory, right? Clean, simple. But here's the kicker. What happens when that perfect, neat little theory actually meets the messy, complicated real world? Well, it turns out in the real world, finance is anything but neutral. I mean, think about it. The person asking for a loan always knows more about their ability to pay it back than the bank does. And contracts? You can't write a contract that predicts every single thing that could possibly happen. It's impossible. And here's the big one. A decision that seems totally smart for one bank, like taking on a bunch of leverage, can end up creating huge, system-wide risks for absolutely everyone else around them. So what's the big takeaway here? It's that the design of our financial system is not some trivial background detail. No way. Its structure, the rules, the connections, the incentives we build into it, actively shapes our entire economy. It has massive, real-world consequences for growth, for stability, and for all of us. So all of this breakdown of the old model, it really pushes us towards a much more powerful way of seeing things. It's time to start thinking in ecosystems. Okay, so for a long time, people have kind of been stuck in one of two camps. You had the market-centric folks who were obsessed with prices. Then you had the institution-centric people who only looked at individual banks. But you see the problem, right? Both of them were missing the forest for the trees. The ecosystem view is what finally lets us zoom out. It shows how everything, the markets, the institutions, the rules, interact to create these bigger, system-wide properties, things like fragility or resilience. And this ecosystem view really boils down to three huge ideas. First, structure matters a lot. Second, the connections between the parts are actually more important than the individual parts themselves. And third, and this is the mind bender, big outcomes, like a financial crisis, they aren't caused by one single thing. They just emerge from the complex interactions of the entire system. Okay, so if we're going to run with this idea that finance is an ecosystem, what does that actually look like? I mean, what's its architecture? How do we even begin to map out all that complexity?
Well, one really useful way to get a handle on it is to break the ecosystem down into 5 interacting layers. Now, this is super important. This isn't a pyramid. Think of them more like 5 different systems in a body, like the circulatory system and the nervous system. They're all distinct, but they're all constantly interacting and shaping each other.
Let's start at the base. Layer 1, information. This is the nervous system of finance. It's all the data, the prices, the signals about risk, basically all the raw material that everyone uses to make decisions. Then we have layer 2, infrastructure. If information is the nervous system, this is the plumbing, the actual payment systems, the settlement mechanisms, all the behind-the-scenes stuff that has to work perfectly for money and assets to move from point A to point B. Layer 3 is where things get dynamic. Innovation. This is the engine of change, right? New financial products, new technologies, new ways of doing business. It's what keeps the ecosystem evolving, but it's also where new unexpected risks can pop up. Next up, layer 4, integration. This is all about the connections. This web of connections is great for sharing risk, but it's also the exact same path that panic uses to spread like wildfire during a crisis. And finally, tying it all together, we have layer 5, governance. Think of this as the immune system.
It's the whole set of rules, regulations, and even just the unwritten norms that try to keep all the incentives lined up and maintain some kind of balance across the entire system. And when you lay it all out like this, you see something absolutely crucial. You can't have it all. There are no perfect solutions, only trade-offs. For example, you want a super efficient, lightning-fast, low-cost system? Great, but you're probably sacrificing resilience. You want a totally integrated global system? Awesome, but you're giving up the firewalls that could stop a crisis in one country from burning down the whole world. These aren't mistakes in the design. They are fundamental, unavoidable tensions. So that leads to a pretty daunting question, doesn't it? If the system is this incredibly complex web of layers and trade-offs, how on earth do you even begin to test it for weak spots? This is where the paradigm shift really hits home. The old way of thinking was all about prediction. Let's try to predict the next big crisis. But the ecosystem view tells us that's basically a fool's errand. The new idea is to stop trying to be a fortune teller. Instead, we become explorers. The goal isn't to predict the future, but to explore how the system we've built behaves when it's put under pressure. And this quote just nails the new philosophy. A stress test isn't like a final exam where you're just trying to get a passing grade to prove you're safe. No, it's more like a fire drill. It's a tool for learning. You're deliberately putting the system under strain to see where the cracks are, so you can be smarter and better prepared for the real thing. And that changes the whole process. The old way was to cook up some big, scary story. The new approach is way more like what a doctor would do. First, you diagnose known fragilities. Where is the system already weak? Then you apply a very specific, targeted stress to that point. And then, this is the most important part, you watch. You trace exactly how that stress travels, how it gets amplified, and how it ripples through all those different layers of the ecosystem. All right, let's bring it all home. We've gone from thinking about finance as a machine to seeing it as an ecosystem. We've shifted from trying to predict the future to exploring the present. So, what does all this mean for how we actually manage this whole thing? Well, it means the ultimate goal has to change. We have to let go of the arrogance of thinking we can engineer some perfect, flawless, crisis-proof machine. It's just not possible. The new goal has to be something more like stewardship. It's a much more humble approach. It's about a continuous practice of care, oversight, and good judgment for a living system that we can definitely influence, but one we can never, ever fully control. And that really leaves us with a pretty profound and, frankly, a really difficult question. If we finally accept that we can't perfectly control this financial ecosystem, then the real question becomes, can we become wise enough to steward it? Can we develop the wisdom not to build a perfect machine, but to carefully guide a living system? That right there is the challenge ahead.